you need to be very careful if you're going to just try and relocate assets and a business and you don't have a good reason for it.
What could a potential Slovak manager want from coming to Gibraltar?
I think one of the main advantages is the simplicity of the regime. By and large, it's a very easy regime to understand. I think it's quite easy for Europeans who know a little bit about European funds law to understand how we work.
Thank you for watching Highgate Talks podcast. I'm Peter Varga, your host, and here is Peter Howitt from Ramparts Gibraltar. Hi.
Hi Peter, thank you.
Peter will be speaking about some useful insights as to what it is to operate in Gibraltar as a legal entity or in relation to, for instance, setting up a crypto fund. So I'm very happy you joined us today. Peter, we had a conference yesterday. We spoke about various regulatory regimes, such as MiCA regulation or tokenization of financial instruments. We spoke about administration cooperation in terms of automatic exchange of information, the enforcement of tax rulings, various topics. We also tried to delineate what it is to be considered or regarded as a tax avoidance and tax evasion schemes, because usually there is a huge demand for us addressing these topics. To put it plainly, people don't want to pay taxes, and it was one of the triggering reasons why we actually opted for organizing this conference. And during the last chapter, the last panel, you were there, you took part in the last conversation with partners from Cyprus and the Emirates and the Czech Republic. We tried to compare various tax regimes and regulatory regimes in those respective jurisdictions. How did you like it? The conference itself and the panel discussion at the end?
Yeah, it was good. Very good conference. I liked the range of people that I met from the conference. It showed it was they were professional and experienced in crypto and dealing in cross-border issues. Most of the people I spoke to have tried to set up companies in different countries. That means they had insights into what the reality was, because as you know, when you tell people about your country, you have to keep it at a very high level in terms of the structures and the tax. But that's not always the reality that people find when they go to a country and try and set up a company. So it was good to get feedback from people on their experiences in the UAE, Malta, less so Gibraltar, although we've got clients in the Czech Republic and Slovakia. I think Gibraltar's less known or less well used.
I confirm that.
Yeah, and because we're so small, as you know, we're only 3 miles by 1.5 miles in terms of the size of the territory, and we only have 35,000 residents. So it's a really small place. But yet, despite that, we are the second largest jurisdiction in the world for crypto funds. So we're obviously doing something right.
What is the first? Cayman?
Cayman, yeah, and then America's third. There's been a bit of a movement away from America for crypto, largely, I think, because of the regulatory issues there and the I kind of guess a bit of a hostility towards crypto people have sensed with some of the American bank issues too. But yeah, it was a good conference. It's nice to get a chance, quite frankly, to present on Gibraltar. It's a place I love. I'm not from there originally. I'm British, but I've been there for
Scottish.
20 years. Scottish, yeah. Thank you. I definitely don't say English. So I've been there for 20 years, and my son was born there, so I feel like it's my home.
Okay. Despite of you having Slovak and Czech clients, I understand it was your first time being in Slovakia. How did it happen? Why did you decide to embark upon this journey? How did you end up meeting Slovaks and Czechs as your clients?
Yeah, I was fortunate in 2017. A person in Gibraltar, a Czech guy, he was working in the gaming space, and he wanted to set up a crypto fund with a friend of his, a poker player. So we chatted about it. They didn't have investors ready. They didn't, it was really early stage. So I said I'd help them, help structure it. I gave them a bit of leeway on fees. So I really, he was a friend really. So I wanted to make it happen. I was into the crypto space myself a bit. And that did really well. That's Sigil, one of our bigger funds. So from that, really then it developed because they obviously told their friends, and they had contacts in Czech Republic and Slovakia. And so then they would contact us, and it snowballed from there. But really it was about that first person who trusted us, and I think where we showed that we were willing to be a partner and not just say, like, this is what we do, this is what we charge. We worked on it together more like you would with a business partner.
I see. So it became worth visiting Slovakia after having gained such an extensive experience with the Czechs and Slovaks. Finally.
Exactly. Yeah, we thought our clients deserved it as well. You know, we should come and say hi.
You spoke about these crypto funds, that it was one of the topics we mentioned over yesterday's conference, and as you mentioned, Gibraltar is quite famous for setting up these crypto funds. Could you please elaborate a little bit on the structures that are typically used in Gibraltar? What could a potential Slovak manager want from coming to Gibraltar?
Yeah, the first thing to remind your viewers is that although Gibraltar left the EU when the UK left, you know, we were forced to leave despite wanting to stay in the EU. Like the UK, most of our financial services regulatory structure is European. So the funds regime is substantially the same as AFMD. We have a regime for financial service providers, which is MiFID based. We have e-money and payment services, which is based on the same legislation. So despite being outside of the EEA, it means that in terms of the regulatory approach to funds, I think it's quite easy for Europeans who know a little bit about European funds law to understand how we work. So usually what we're looking at isn't necessarily the regulatory side, because it's pretty harmonized. It's more, you know, the practical side. Do they want to have a fund as a company, or do they want to use a partnership? We tend to find people use partnerships from some countries where there are tax benefits of a partnership. So Israel, you'll often find they want to use a partnership fund rather than a company. But most of our funds are company structures. And we only really have two types of funds in terms of the market that's available. We've got the private fund regime.
So the sub-threshold funds, right?
They could be above. They could be
bigger even.
They could be bigger, but the only two that we've really got are the private fund regime and the experienced investor fund regime. We don't have a UCITS. We don't have any UCITS funds. And the private fund regime is limited to 50 investors. It tends to be the fund structure you start with, because it's
the family friends structure, right?
Family friends, close business associates. So it's really like a startup fund structure. And the benefit of that is you can do it very quickly and cheaply. You do need to register with the regulator. So you do have anti-money laundering and counter-terrorist financing obligations. But other than that, and some reporting on financial crime, you don't have very much to do in order to be compliant. So it's very AML focused. If you want to have more than 50 investors, you need to use the experienced investor fund regime, and that's where you'll have two regulated directors. I'm an EIF, which means the regulator, although they don't authorize the fund or the fund manager, they've got points of contact from a regulatory perspective. So if something goes wrong, quite frankly, I'm on the hook because I'm an approved person. So you have two local directors who are approved to do that. There's no limit on the number of investors, but you can't have what we would consider to be retail investors. So they need to be high net worth, sophisticated or professional.
So I understand that apart from you providing legal tax services, you also provide the infrastructure, which is necessary for operating the funds in Gibraltar? Yeah,
so we'll do the structuring on the front end. So what kind of fund do they want to do? What's the offer document going to look like? How are we going to identify the strategy and the risk?
But you being appointed as a director or someone who is on a hook if something happens, that means that you also provide some kind of another additional layer of complexity to the fund structure, the practical complexity, practical infrastructure. Does it mean that, for instance, in the Czech Republic, unlike Slovakia, there are several investment companies where you can just set up the fund with the use of their license? Does it mean that you provide a similar kind of services in?
Not quite. It more comes from the fund administration side, because we're a regulated fund administrator. So we're licensed for EIFs, so EIFs need a regulated fund administrator. Private funds don't. They can effectively.
So you're licensed for EIF?
We're licensed as a fund administrator.
Yeah, okay.
So that means the administrator, we're responsible for doing all of the compliance obligations, including common reporting standards. We need to do the financial crime reports, we need to do the AFMD report, we need to do the net asset valuations, which means we send the investors a snapshot. That also means we're doing accounting. So we're doing a lot of the back-end stuff needed to deliver a fund. And that means that the person who we've spoke to, they focus on the strategy and the allocation.
You mentioned that Gibraltar is not part of the EU, but at the same time you mentioned that you some kind of follow the regulatory infrastructure of the European Union. Does it mean that if there is a change in the law in the European Union, for instance, there is a change in the Alternative Investment Fund Manager Directive, it is automatically there is a change in the Gibraltar law, or you need to follow it to enact a different act which would actually be compliant with the European regulation?
Yeah, there's no automatic transfer. So if EU law changes in any aspect, we need to then decide that we want to implement it, and we'll usually follow the UK by and large, although we've got some ability to be different. For AFMD, then, for example, we have effectively a dual regime. You can have a fund which is AFMD compliant. You still need to look at, what you need to do if you want to passport as a fund manager and all of the AFMD rules in Europe. But you could also opt out of the AFMD rules. So that means that the sub-threshold limits, they can fall away. So you effectively wouldn't need to have a regulated fund manager, even after 100 or 500 million. And I think that's very attractive for crypto funds that aren't really targeting Europeans. They're not trying to market to Europeans in a large scale.
You mentioned the sub-threshold funds, and at the beginning of this podcast, you mentioned about the necessity of having a proper coordination and cooperation with local advisors, legal and tax advisors. So it's not only about you providing legal and tax services on the territory of Gibraltar, but it must be in a correlation with the home state advisors of the clients. It does apply, for instance, you mentioned the sub-threshold funds where the distribution is not allowed in other jurisdictions, right, as I understand. However, these rules, reverse solicitation rules, which these crypto funds, sub-threshold funds, which are not regulated, just registered in Gibraltar, can use or are supposed to apply to because of the absence of the right to distribute the funds, the classes of shares of the funds in a different jurisdiction. So there must be some kind of a cooperation with the local advisors, not only speaking of the regulatory issues, but also speaking of the tax issues. I'm aware we set up several structures outside of Slovakia, not only Gibraltar, but also Luxembourg or the Czech Republic, where the connection and the fusion between the host and the home member states or states advisors is pivotal for making the whole structure working properly. For instance, just to give an example, if you have a structure in Gibraltar or Luxembourg which allows the stakeholders to receive some kind of a redemption proceed, you have to recognize this redemption proceed and to categorize to put it into the castle, into the category of your local law, to be able to perceive, to understand what tax implication it has in your own country. And obviously there are discrepancies between the jurisdictions in terms of we're not harmonized, and the tax law is not harmonized itself by definition. And as a result, I understand it's very, very difficult sometimes, to coordinate together. So, are you of the same opinion here? That it is really something that without having a proper domestic advice, onshore advice, you run the risk that the whole structure would not be properly set up?
Yeah, I think I think it helps that I qualified in England as a lawyer there, and then moved to Gibraltar. I still advise. I'm still registered in England for lawyer as a lawyer, so often I'm advising clients on English and Gibraltar law, which are very different from a tax perspective. And I think that helps because it means whenever clients speak to me, or prospective clients, I'm always thinking as much about the tax of another place as I am about Gibraltar, because clearly it needs to work having in mind where everything's going to be. Where are the investors? Where are the managers? For example, with a fund, it's not always the case that the people who want to make the investment decisions want to move to Gibraltar. So that gives you another layer of analysis you now need to do. I'm always looking at CFC rules, for example, because, as you know, the CFC rules are widespread. They're not the same. Each country can be slightly different, but they can impact a fund manager who's based in a country, sets up a fund, and then thinks that the Gibraltar taxation of performance fees, for example, is the right regime, and it may not be relevant. It may be that you need to look
You're right, because CFC rules, for instance, you mentioned CFC rules at the legal entities level is even harmonized within the EU. Every single country in the European Union should have CFC rules for the legal entities, and some countries have even CFC rules for the individuals. Yeah, exactly. We had also, but we abandoned it. We don't have anymore. We used to have for 2 years CFC rules also in Slovakia. That was one of the triggering moment for many of our clients who had or have still offshore structures to look at it, at the details. What are the implications of CFC rules for individuals, because they could be really harsh,
And you just have it for companies now, then?
We only for companies, which is like compliant to the EU law. But we used to have also for individuals for 2 years, right? So I understand there must be a proper coordination, but we only spoke about the crypto funds and the tax regimes, but we didn't go into the details. Could you please just a little bit elaborate on what is the tax regime in Gibraltar? Why do people actually opt for Gibraltar as a proper jurisdiction? In terms of taxes, what advantages do you offer?
Yeah, I think one of the main advantages is the simplicity of the regime. By and large, it's a very easy regime to understand, and as you know, tax is becoming increasingly complex. Complex within a country, and then even more complex when there's cross-border elements. I mean, if you look at the UK, when I try and advise on UK tax law, it takes a long time to get comfortable with an answer. Whereas in Gibraltar, it's relatively straightforward. So we have some headline tax rates, so we've got 15% corporate tax. We have no capital gains, we have no inheritance tax, no wealth tax, no withholding taxes. So, it's an easy proposition to sell at that high level. And then whether something falls within the income tax treatment, you have to look at, because not all income of a company is going to be subject to the 15% income tax. For example, funds don't pay that because they are investment vehicles, so they're considered more like a capital vehicle. So it should have a capital gains treatment of any growth. And then also we have an unusual, what's called the accrued and derived principle, which is a territorial basis of taxation, which we talked about yesterday. And very briefly, it just means that if you had a Gibraltar company, and this is only for unregulated companies that don't have a license or permission, if they do activity outside of Gibraltar for clients outside of Gibraltar, so a director in Hong Kong provides a service to a Singaporean, that wouldn't necessarily fall within the taxation for the Gibraltar company because the profit has been generated entirely outside.
And what about the management fees? It could be challenging.
For a fund.
For a fund.
So, so I was thinking of a trading entity, but if you take a fund, well, potentially, although we haven't actually had that analysis yet, because...
So it's not clear-cut?
It's not clear-cut, and also I think we take the view that for a fund, the tax benefits are so great anyway. What we like to say is, look, the management fee should always be subject to income tax because it's of an income nature. And then the work is on being comfortable that the performance fee is in a carried interest type arrangement,
which is usually structured as a dividend payment or a capital gain.
Yeah, so you're basically saying that the person has got an interest in the growth of the fund, a performance, like an investor. You're treating them like an investor. So you're saying that their return from their unit in the fund is effectively a capital.
But what is the nature of the carry interest income from the Gibraltar legal perspective? Is it a dividend?
We don't have at the moment, we don't have a clear guidance. Okay. So in the UK, there's very clear guidance and rules about the extent to which a fund manager should be able to rely on carried interest treatment. And so, for example, there's rules about how long you need to hold the interest. And obviously for closed funds, it's a bit easier, because closed funds, as you know, you take in the capital, you have 5 or 7 years where you're making investments, but there's no liquidity really, so people are locked in. That one obviously is easier to show. It's by its nature, it looks like a carried interest. You're with the other investors seeing what happens. For an open fund, when you can have redemption daily and new investors daily, so constant movement, It's a little bit trickier to structure it in a way where you're comfortable. It still has it's still a capital.
Yesterday we spoke about substance requirements and access principles and all this underlying business rationale you need to find always if you want to scale up your business somewhere outside of your country, of your home jurisdiction. And that's why we're always looking for some other reasons why somebody would like to set up a presence in another jurisdiction. And one of the reasons which is becoming more and more present during us providing legal services to our clients is the legal flexibility, the potential of the predictability of the legal regime. Just give you an example, we have a client, relatively big client, who is about to set up a management company for its own employees, who will become shareholders. There will be vested shares to them. And of course, we can set up the structure also in Slovakia, but the legal flexibility is not the extent we would be willing to have. For instance, there will need to be provisions regulating a potential situation with the bad leavers. If there is a bad leaver, they will need to have a right to forfeit the shares without the bad leaver needing to be cooperative. It is something that may be structured also under the Slovak law, but there will be obstacles and potential scrutiny and challenges connected to this. And as a result, there is a legitimate will and an initiative from the client to look for some alternative solution outside of Slovakia. So we did some beauty contests in terms of comparing various jurisdictions and trying to find the proper jurisdiction for the setup of such a structure. Obviously, it must be also tax neutral, so there shouldn't be any income which obviously incurs in this context taxed at the level when there is no physical gain for the employees. So it's challenging from the legal and tax perspective, but the whole point why I'm saying is because obviously, as I mentioned, there must be some kind of a justification why you decided to set up something in another jurisdiction. The business rationale, the substance other than the tax element, the tax motive. Gibraltar is, as I understand, the common law jurisdiction, right?
Yeah.
Which means that it's completely different to the way of looking at law we have in the civil law jurisdictions. Is it something that your clients or you see that businesses from the onshore Europe, from the continental Europe, are willing to explore in more detail in Gibraltar because they want to be subject to the specific legal arrangements that the common law provides rather than the civil law jurisdiction?
Yeah, I think it really depends on the client and how much experience they've got of international trade. You find that if they've got a lot of experience, they often prefer English law because they find it more flexible, or they find that it's more certain, it gives them more certainty. So, for example, the employee option structures that you talk about, we do that kind of thing all of the time. It's relatively straightforward to do it and also give the client confidence in how it's going to work, and also that it's not the same as it's not as restrictive as the employment law. And I think that's where often you get an issue, as you know, with options, because it's granted to someone in relation to an employment arrangement usually, and so you start to now get an overlap between, well, what employment law restrictions and rights do you have, and how does that work with options which go with employment. But we tend to, I think English law allows you to be very flexible in terms of defining what you want to achieve. And I think if the client's had any experience of English law, and usually they have from a contract perspective if they've done business with clients outside of Europe, or a lot of cross-border trade is done with English law and English jurisdiction, even as a forum, for disputes. So it really depends on how much experience they've had. But when you explain, once they've got used to English law or common law, I find a lot of clients like it. They think it's more flexible.
I see.
Because the parties can really define a lot of the things they want to do, and there's some principles you need to be aware of, but there's a huge amount of allowance for the parties to reach an arrangement which they're happy with.
Yesterday I spoke at the conference about various statistics in terms of cooperation between Slovakia and offshore jurisdictions, including Gibraltar, including Cyprus, including the Emirates, etc., and so forth. And one of the practical outcome of this presentation was that you need to be indeed fortuitous in order to be scrutinized by the Slovak tax authorities based on this automatic exchange of information. However, with all these forthcoming changes, the DAC 8 directive and the other changes that are forthcoming, it may inflame the willingness of the tax authorities also in Slovakia to be more proactive in curbing tax avoidance schemes, etc. and so forth. And as a result, there might be some kind of willingness to look for and try to investigate more in detail the substance of Slovaks and potentially Czechs also in Gibraltar. What is the market practice you have seen so far? What substance is applicable generally for the crypto funds and also for the plain legal entities which would like to benefit from the preferential tax treatment in Gibraltar?
Well, if we start with the trading entities, because it's, I think the points you made earlier about there needs to be a reason for if you're going to shift assets or even your business to another jurisdiction. European law will often provide that could be considered a form of avoidance, which isn't lawful. And the two defences traditionally in European law to that are one, regulatory, if there's a regulatory reason for the move, and the other is a genuine economic reason. So for a trading entity, first of all, if a person in any country in Europe or in the UK comes to us and said they'd like to do what they're doing now from that country in Gibraltar, we have to explain to them that actually just wanting to have lower tax isn't, whilst it's understandable, it's not actually one of the defensible reasons for the transfer and the move. So you have to look quite carefully, and you also have to be willing to not take on a client, quite frankly, because yes, you'll get fees for setting up a company, but you've caused them trouble. So I think, okay, they can go somewhere else, and maybe they'll go somewhere where the person doesn't know UK tax law or European tax law, but I can't stop that. At least hopefully I've explained to them, look, you need to be very careful if you're going to just try and relocate assets and a business and you don't have a good reason for it. Because usually the country's anti-avoidance rules are looking to prevent that. Because otherwise, I guess they're worried everyone would just offshore and then continue to provide services in their country or to the same client base. For funds, it's a bit different because funds have additional infrastructure they need. I mentioned before, for the larger experienced investor funds, already they need to have 2 Gibraltar directors that are approved. That, as you know, gives you some substance from most definitions of management control. And
the regulation itself adds additional level of substance.
It does. Well, it does. As well as there's also that we're the regulated fund administrator. So that's another touch point in terms
auditor.
Of. You need an auditor. I'm not sure the auditor makes as much difference from that perspective in terms of.
The auditor is based in Gibraltar, isn't he?
Yeah, they are. But so you've got 2 directors, you've got a fund administrator, you've got an auditor. You've already got quite a lot going on. And traditionally, as you know, fund vehicles don't tend to be looked at the same way as well by tax authorities. So in the UK, for example, there's closely controlled company rules, which means if you and I are in the UK and we set up a company in Gibraltar and we own it, a bit like the CFC rules, they can just look through that company and say, no, we're going to have...
disregarded and
exactly, so like a deemed distribution, even if we never get a dividend. So you have all of that. But when you have a fund structure already, in a sense, it would need to be artificial for the tax authorities to want to attack it, because the fund structure isn't meant to be that. It's not meant to be for a few people to set up something to avoid tax. It's got additional rules in terms of how it's managed. It's got a lot of regulatory obligations. So it's not the ideal vehicle for tax avoidance. I think that's why it probably gets quite a lot of leeway as well.
Yeah, sure. Let's be practical here. What about just roughly estimates? If you could please provide a little bit estimates as to what can a client expect from setting up a fund in Gibraltar? What would be the fee estimate very roughly?
And it doesn't have to be rough, it can be accurate.
Okay.
We charge the same for everyone. We have a brochure and it's there on our public brochure. So we charge a little bit more for the experienced investor fund and the private fund. So we charge between 12,500 and 15,000 That includes setting up the company for the fund vehicle and the legal work on the offer documentation and some other things. In fact, there's quite a lot of advice on tax, both Gibraltar and making sure that they've got tax advice from where they're based or where the relevant people involved in the structure are.
And then for looking at our direction as a
yes,
relevant
exactly.
people.
Well, it does require them to have good advice.
You're impressed by the view and the office
and your knowledge as well.
And the conference.
I can tell you.
Thank you very much.
Well, I think the modern world now means that advisors, legal and tax advisors, they need to be thinking cross-border all the time. So we need to work together, don't we, in order to protect our clients. So we charge 12 to 15 to set up, and then an annual fee, which is a minimum of that amount. It can be a bit more because we'll do a percentage of net asset valuation. So if the fund is worth has 100 million in assets, then we'll get a bit more than our minimum fee. But we still, it keeps it relatively cheap. So I think when I hear other people at your conference talk about the costs, I'd say that we're definitely on the low end. Setting up a company is €1,000. So I'd say we're quick and we're cheap, but we're not easy. It's not like you can just come and
set up a bank account and set up. Yeah.
Well, and also we're going to ask you questions.
Yeah.
We're aware of how other countries look at places, offshore places that have low tax. We're very aware of it, and we need to protect our clients.
Thank you for joining us today.
Thank you, Peter.
It was a real treat. Thank you, and thank you. Hopefully you enjoyed this podcast, and stay tuned for the next episodes. If you like it, please subscribe us. Ďakujeme, že ste si vypočuli a pozreli náš ďalší podcast. Verím, že tie informácie boli pre vás hodnotné a ak by vás akékoľvek ďalšie témy z oblasti práva, daní alebo účtovníctva zaujímali, tak máme množstvo ďalších videí a samozrejme budeme radi aj za váš odber.
Premýšľate o predaji alebo rastovej investícii do vašej firmy? Zúčastnite sa unikátnej konferencie Predaje a investície do slovenských firiem. Naši speakery vás prevedú procesom predaja, upozornia na kľúčové daňové a právne aspekty predaja podielu vo firme a vysvetlia hlavné rozdiely medzi private equity a venture kapitálovými investíciami. Získajte nové kontakty a praktické know-how od popredných poradcov a investorov. Vstupenky a viac informácií nájdete na highgate.sk.